you should join Phil's gang.
You know, when I started this, they asked me, okay, can you explain to people why they should join the gang? Gee, I thought about that. And I guess to make money. But more than that, to get good direction on which way the economy's really going. We get so much crap, so many lies, how great the economy is and how great the tech business is, and when it's not. The problem is we have too many people in Washington and in this industry that just don't tell the truth. The truth is everything. And here at Phil's Gang, we stick with the facts. We tell the truth. We make sure our members, are getting the best information, and our listeners, like you. We make that information available to you and make it simple and understandable.
Good investing means understanding how the stock market works. Join today at philsgang.com. Want the truth when investing in the stock market? Here's how.
Hi, I'm Phil Grande at philsgang.com. Listen to my radio show every day because that's where you're going to get the truth. You're not going to get the truth listening to these dopes on Fake Business News Network. The other day, Kramer said, don't listen to the banks. They're giving you wrong information. When he told you to buy Merrill Lynch, remember? And what happened? They went broke.
Get the truth at philsgang.com.
Join my gang, philsgang.com. Get the truth. And also listen to me on my podcast on YouTube and Rumble. That's philsgang.com. I'm Phil Grande at philsgang.com. You know, I've been doing this business of trading over 55 years. God, they make it so complicated. It doesn't have to be. The best way to learn is to follow me, my actual investments. That's right. When I buy a stock, you follow me. Do exactly what I do. That's the best way to learn.
Check out the free 10-day trial. Learn more at philsgang.com.
Be my co-pilot at philsgang.com. Do what I do.
That's philsgang.com. Want the truth when investing in the stock market? Here's how.
Hi, I'm Phil Grande at philsgang.com. Listen to my radio show every day because that's where you're going to get the truth. You're not going to get the truth listening to these dopes on Fake Business News Network. The other day, Kramer said, don't listen to the banks. They're giving you wrong information. When he told you to buy Merrill Lynch, remember? And what happened? They went broke.
Get the truth at philsgang.com.
Join my gang, philsgang.com. Get the truth. And also listen to me on my podcast on YouTube and Rumble. That's philsgang.com.
When the stock market is volatile, how do you invest intelligently?
Hi, I'm Phil Grande at philsgang.com. There's no need for you to be panicking in a market that goes up 800 points one day, 700 points, then it goes down again. All you need is good advice, need good direction. You don't get that from your CNBC and the Fox Business and all these crazy shows. You don't. Here's what you get from them. Thank you, Jim Cramer. But this is something that this really bugs me. Listen to this.
Our responsibility begins and ends with our partners and our shareholders, and that's it.
What? Their responsibility is to their partners and shareholders and not to you? Check my site out, philsgang.com.
When the stock market is up one day and down the next, you need the experience of Phil Grande at philsgang.com.
What a difference it makes in your financial life. philsgang.com. It works.
Why are investors listening to Phil Grande of philsgang.com?
You know why people listen to my show? Because I make it simple. When you talk about the stock market, they make it so complicated. I make it easy to understand. For the average investor, the Main Street investor, most of the time, these guys, it's like they're talking to each other. We talk directly to you and we listen to you.
Invest better with the sound advice of Phil Grande at philsgang.com. Phil Grande has successfully taught tens of thousands of investors how to navigate the market with confidence.
Hi, I'm Phil Grande at philsgang.com. That's right, philsgang.com. Join my gang for 10 days. It's free. If anything, during that 10-day period, you're going to learn how the market really works. You're going to find information that you never had before. You're going to walk away and go, I didn't know that. So join my gang for 10 days free, philsgang.com, and you're also going to learn how to make money when the market goes down. It's kind of silly just sitting there when the market going down, hoping. Why hope when you can sell short and make money? Either way, you make money when the market goes up, you make money when the market goes down. That's the benefit of Phil's Gang. You make money.
Become a Phil's Gang member and receive the training, advice, and software that will take your investing to the next level.
philsgang.com. Sign up free for 10 days.
Stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money's coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
And we know in January, consumers' disposable income increased by about 1%, but their savings increased by more than 30%. So they have the ability to spend more, and they chose to save it.
Really? 30% increase in savings. And they keep talking about how strong the consumer is. And it's just not true. It's just not true. These people that come up with these stats, net savings as a percent of gross national income is below a record 0. Savings as a percent of our disposable income is below a record 5%. 401k emergency withdrawals at record levels. Consumer debt, credit card, auto loan, student loans, all at record levels. I could go on and on, but they keep on going on and tell us just how, people are just in, good shape, and they're not. Welcome. My name is Phil Grande of philsgang.com. Welcome to my radio show and podcast. Okay, so they keep talking about soft landing. Give me a cut about a soft landing, Will.
The soft landing outcome remains intact. Inflation continues to be on the right trajectory. Earnings are going to be great. Consumers in good shape. So I think all in all, the soft landing outcome is the most probable.
Really? Soft landing? Yeah. Soft landing, to me it looks like a slow motion train wreck instead of a soft landing. What are you, nuts? This is crazy. We've been in a 20% trading range for what? 7 months? Here, look at this chart. I got this chart for you. This is unbelievable how these people just sit there and just BS you to death. Look at this. We have been in a trading range for 7 months. We're in this 20% range. Now remember, August 2024 was the low, and also February 19th was the high. And we can't break out. Now, why can't we break out? Because there's no money to break out with. Now, what do I mean by that? Well, let's take the big guys, big institutions. Now, the institutions, hedge funds, they dropped their exposure to the Magnificent Seven from 21% to 13%. They also, these same hedge funds, dropped their exposure to the NASDAQ from 20% to 18%, and it goes on and on and on. So if you got a 20% range, and we've already pulled back about 5 to 7%, in some cases 10%, the NASDAQ, how are we going to rally and break out? So if the institutions are not stepping up to the plate and participating, which they're not, because what they've been doing for the last 7 months has been selling their stock to the tourist investor. They always do that. The tourist investor knows nothing. They always buy right at the peak. And the smart money sells right to them. Here, take mine, you can have mine. So if we don't have the hedge funds, we don't have the big institutions, we don't have the banks, don't have the insurance companies who are going to step in, how do you break out of this range? The answer is you don't. You go down. So that's the problem that we have right now. And if you look at a chart, I'll show you another chart. I'll put it up here in a second for you, that it shows that the tourist investor, all he has is stock. He has no liquidity. He's out of liquidity. He's fully vested. He's got every penny. He borrowed on his home. He's leveraged everything to buy stock. So if you can't get the institution investor to break us out, and if you can't get the tourist investor, because he's already levered up, and you can't get him to break out, there's only one direction to go, is down. Now, if you take a look at this chart, for example, one of the biggest problems, or one of the biggest falsehoods since 2009 is how great this market has been doing. The market's been doing terrific. Look at that. The S&P's up 800%. But no, it's not up on productivity. We're not producing anything. In other words, we are not taking money and plowing it into business investment. We're not plowing it into new machinery, into IT spending. We're not plowing it into new labor, facilities, so that we can increase productivity, to increase wages, increase jobs. And then we grow our economy as people go out and spend. That is not happening. And if you look at this chart right here from 2009, this is all money supply. Money supply. It's all printed money. That's right. And what is money supply? Money supply is the amount of money that Treasury prints to purchase treasuries, okay, which effectively puts money into the bank for you to go into debt, for you, the consumer, to borrow. Now, what we're finding out is from 2008 or 2009 to 2013, it took about 30, I just want to get this right. It took about, just want to make sure I get this right for you. Yeah, it took a $3 trillion increase in money supply for 172% S&P gain. Let me repeat. To move the stock market up with QE, quantitative easing, stock buybacks. You know what QE is. You print money, or the government prints money, and then the Fed goes out and they buy all the treasuries, and then they keep interest rates at zero so they can now take the money and plow it into these banks, and so people could go in and borrow cheaply. So think about it. From 2009 to 2013, what moved us 172% is not earnings. That didn't do it. Not increased margins. Not top-line sales, but just printing more money and throwing it at the banks, and the banks are lending it out. So people are getting more in debt. Between 2009 and 2025, it took another 100 and, let me just make sure I get this one right too. I don't want to give you some wrong numbers here. Just see if I get this one right for you. Yeah, it took a total of 14 trillion increase in money supply for another 800% S&P gain. So if you put it all together, about $17 trillion to move this market 800%. Now think about that for a moment. They're buying the market. Okay, that's how they're pushing the market up. They're buying CEOs. They're going to CEOs and say, here's money free. Now buy your own stock. And when they buy their own stock, right, what happens? Their earnings go up and it pushes up their price, but earnings go up without doing anything. You don't even have to have top-line sales. So that's why we got this big rally. Now, going back to what we just talked about a moment ago, this 20% range that we're in, how are we going to break out? What are you going to do, more QE? That's a good idea. Gee, yeah, let's do some more QE. Let's go print some more money, go buy some more 10-year treasuries. Let's then bring interest rates down to near zero. Let's lend the money to CEOs of companies. They can buy their own shares, increase their earnings without having to sell anything. That's good news. And that's why we got a problem with valuations, because remember, the smart money, they are not in there buying stocks, because they're not going to, the PE ratios that they're looking at right now are nuts. They're not going to go for these PE ratios. They're not going to pay these kind of numbers. It just doesn't make any sense. So again, why would smart money, think about it, pay a PE ratio of 30%? Meaning he's going to pay 30 times more than the company's earnings. What are you, nuts? Or why would he pay a CEO of a company or an investor, smart investor on Wall Street, pay 42 or let's say pay 42 times more than the company's earnings? That's insane. Anybody with a brain is not going to do that. The only people that would do that is dumb money. They're called tourist investors. So that's a real problem right there alone. So again, you got the retail investor, he's tapped out. He has all stock. He doesn't have liquidity anymore, so he can't help out. And then you got the big institutions. They're not going to jump in. They're not going to participate. They're not going to pay these PE ratios. So that's why we've been stuck in this range for all these months. So again, today we get our number on inflation. Inflation's gone up. Well, whoever thought it would go up? Are you kidding me? Inflation? We all know inflation. They've been lying about inflation. And again, just like, QE, they've always lied about QE. QE's never worked. It wasn't supposed to work. Remember, QE never intended to do what it was supposed to do. It was supposed to help the people who work paycheck to paycheck. It was supposed to help them out. It was supposed to, the big institutions would get all the money, would get the zero interest rates, and they would go out and they would do business investment, new machinery, new equipment, hire people, and then that's how the workers who are working paycheck to paycheck would benefit. They start getting raises. Well, they never did that, because remember, in 2008, 2009, when Obama came into office and Bernanke, they told the banks, okay, we're going to increase your money supply, but we don't want you taking any of that money and giving that money to households to help them with their mortgages that they're upside down with. We don't want you to give any of that money to small businesses for lines of credit. We want you to go out and buy commodities. We want you to go out and buy metals and gold, buy commodities, and go and buy all those banks that went bust, all the small banks, and pick those things up for nothing. You can pick up all their deposits. You don't have to pay for them. We're here to help the rich guy, the wealthy guy who lost money during that 2008 period. We're here to help them. We got to get them going. We got to get them back to the casinos. They're the players. So that was the idea of QE. They knew QE wouldn't work because it didn't work in Japan. So the idea was to get the entrepreneur, the player, back to the casino. Get them buying commodities. Get them doing mergers and acquisitions while they're screwing the small guy. But they got away with it. But now it's catching up to them. Because now you got sitting on the books of the Federal Reserve $7 trillion of these bonds they bought. And what's happened is all these bonds that they bought, the value has ruined the dollar, and it's ruined the currencies of all the other countries as well as our currency. And everybody in all these other countries are now selling bonds. They're dumping bonds. They're getting rid of them. So for anyone to sit back and say, oh, there's never going to be a crash, we're just going to go a lot higher, you should think about these things. We'll be right back with a lot more.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
If you want to invest your money and grow your wealth, listen to this.
Hi, I'm Phil Grande at philsgang.com. You know, I get so tired of listening to the same garbage every day, listening to the fake business news network telling you why you should buy this stock, why you should buy, and they're always wrong. Join my gang, philsgang.com, free for 10 days. You're going to learn when to buy a stock and when not to buy a stock. Hey, years ago it was different. You could buy a stock based on fundamentals. You could buy a stock based on earnings. You could buy a stock based on PE ratios. Those days are gone. That ended with QE. That ended when they financially engineered the market in 2008. Gone. Now you got to follow the money. And we have the knowledge because we have the chart. Pro 2 color code chart tells you when to buy, when to sell, when to run like hell.
For a limited time, you can join Phil's Gang free for 10 days.
Check it out, philsgang.com. Get the truth, get the knowledge, and understand how the market really works.
Welcome back. Learn, invest, and make profits with Phil Grande. Simply go to philsgang.com. Now, here's Phil.
And welcome back to Phil's Gang. Do you know that 80% of the people in the stock market lose money? Lose money. And I've been doing this for 50 years, and I still can't get that through my brain. 80% of people lose money. Why do they keep going back into the market to keep losing money? Because they live in the hope mode, And one of the biggest hope modes is bonds, the bond market. And the bond market is sad because Wall Street are the great salespeople. They know how to sell. And they sell bonds like it's a parachute. It's safety. It's dependable. You'll never lose money. Ask the people in 2013, how well did they do with their bonds? And why is the bonds? Think about it for a moment. They sell more bonds than they sell stocks, and yet stocks outperform the bonds because it's the way they sell it. They sell them as you can't lose with a bond. You're always going to be safe with a bond. Let's take your portfolio, go 60-40. We'll always be safe with a bond. And you're not going to always be safe with a bond. You lose money with bonds. Ask the people in March of 2023, the Bank of Silicon Valley Bank, asked them how they make out. So the problem is they sell, just like with quantitative easing, they lied to us about what QE really was. They kept telling us QE is going to get us all on our feet. It's going to get first the big guys on their feet. All this money's going into manufacturing. All this money's going to help create a lot of jobs. And then all that money's going to filter down, and you're going to get better jobs, better pay. You're going to get overtime. You're going to get better benefits. It's going to be wonderful that the very top become more wealthy than they already were, because you're going to benefit. And it never worked out, because Bernanke knew it was a lie from the beginning, because Bernanke knew, as a student of Japan and that market, that it never worked. QE didn't work in Japan. And also Bernanke, he had 3 different opportunities. He did 3 different QEs, and every one of them failed. The only people that made out are the very, very wealthy. That's it. So again, everyone's hoping for another QE. It's not going to happen, because we have on the books right now, the Fed is holding $7 trillion of these bonds. So you just can't sit there with these bonds and not unload them, and just hold them forever. So again, if you're really thinking about what is this market going to do? That's everybody's question. What's the market going to do? Well, the market right now is we're going to continue to be stuck in this 20% range. At some point, okay, we're going to rally one more time to the upside. One more time, we're going to rally to the upside. Now, why do we rally to the upside one more time? Because the CEOs of all the companies like Goldman Sachs, Morgan Stanley, all the big companies, okay, Wells Fargo, they've got to get their people out, meaning they represent the investment banking side of these banks, represent the unions, they represent the police and the fire, and they got to get them out at the very, very top. So they're going to rig the earnings, rig anything to get a rally to get them out. Once they are out, they pull the plug. They pull they pull the bid, and then that's when the market starts going down. So you got to ask yourself, why is it that for 7 months we're not going anywhere? How healthy can that be? It's not healthy at all. So here's what we've been doing. If you can take a look at our chart here, we've taken all the banks. We did a great job here at Phil's Gang, and we caught the banks on the way up with a big rally, and then we caught them on the way down by shorting. See, that's the problem. People don't short. That's why the 401k is a failure. It's a failure. The guy who started, Ted Bennett, who started the 401k, he even says it's a failure, because you got to be able to short. And with 401ks, you can't short. You just sit there while the market's collapsing. You're sitting there losing money. Now, if you take a look at Amazon, for example. Now, what we did with Amazon, we did what we call a swing trade. After we rallied it, and then let's switch the charts over here so you can see it. Okay. If you look what we've done here, so we went ahead and we shorted, and you can see over here right now, Amazon. We shorted Amazon when it turned red on our Pro 2 color-coded chart. Our color-coded chart follows pricing, not like your stock. Your chart doesn't follow pricing. The charts we designed 25 years ago follows pricing. That's why you see different colors, green or red or yellow, okay? And so when we shorted Amazon, we turned around and said to let's do a swing trade on our Pro 1. And it rallied nicely. But the people who don't know what they're doing, when they saw the market starting to rally, or when they saw Amazon starting to rally, they didn't realize it's a swing trade. They don't know the difference between a swing trade and a position trade. So what they've been doing is getting in these position trades in a downtrend. If you can see right here, this is your downtrend right here, okay? This is a downtrend. That's called the downtrend right there. So what they're doing is they're buying stocks going up, trying to get these stocks to go up when it's in a downtrend. Then what's happened, you can see right here, they're all collapsing and they're all losing money. Not us, because over here, what did we do? We caught the swing trade on the way up, and then we turned around, reversed, and caught the swing trade on the way down. My point is, if all you do is just buy and you can't sell short, I don't know how you can make money in a stock market. You know how good of a trader you have to be? That all you got to be so good that every time you buy a stock, it's going to go up. It just makes no sense. Now, another thing that is interesting and that most people don't know about, and I'm going to share this with you, is when you look at a stock market, and I'm going to put it up here for you right now, okay, just so you can see it here. I'll pop it up here. Just give me 1 second here. I'll get it up, and it's right here. Okay. If you see on my chart, this is Enron. Now, but this, if I did an overlay with the S&P at the same time Enron was falling apart, it looks exactly the same. When you're sitting there and everybody's telling you the market is not going to crash, it's not going to go down, Phil Grande's wrong, then here's all you have to look at. On your chart, you have a 200-day moving average line and a 50-day moving average line. Anytime you have that 200-day moving average line move to the outside, and you have the 50-day moving average line on the inside, that means that stock, every time they come in, the tourists, and buy on the bid, buy on the dip, buy on the dip, they never can break through and they always lose money, just like they did right here. That last time they bought on the dip right here, and look, they got slaughtered. So it's important to know that once the momentum breaks one way or the other in this market, and obviously the momentum is going to break to the downside, not to the upside, because of all the things I went over with you, all you got to do is make sure that your 200-day moving average is on the outside of the 50-day moving average, and then start shorting, because no way can that market just turn around and go right back up. It doesn't happen. Now, on the opposite side, it's the same thing. If you have the opposite, where you have the 50-day moving average above the 200-day, which is the opposite, then the stocks that we bought, then they're going to do nicely. That momentum is going to stay to the upside because you have, again, the 50-day moving average to the outside. So on the other side, when you're shorting, you got the 50-day moving average to the inside. So these two patterns, and again, just join our gang. We'll be happy to go over it again with you. Join for 10 days, it's free. But we'll show you these patterns. It's called pattern recognition. These are the things that help you make money. And there's nothing wrong, okay, with shorting stocks. And people continue to be scared over shorting a stock. Now, let me tell you why you shouldn't be scared. Here's the chart I just talked about, how the hedge funds, look what's going on here, how the hedge funds, what they're doing. They are no longer, and here's the chart proving it right here. The hedge funds have said, no more Magnificent Seven, we're pulling back. We're not going to have any more exposure to our Magnificent Seven, no exposure to the NASDAQ. They're starting to pull back. That's big proof. That's not my chart, okay? Also, they're telling you how wonderful the economy is. Where's that guy again? Play that clip. The guy's telling everything's just wonderful.
And we know in January, Consumers' disposable income increased by about 1%, but their savings increased by more than 30%. So they have the ability to spend more.
I'll just turn him off. He's such a dope. Look at the truth. This is the truth. Corporate bankruptcies are up 40% year over the year. They're the worst in 14 years. Credit card debt, a record $1.2 trillion. Delinquencies rising. Layoffs, hiring freezes. We've never seen employers freezing jobs so quickly as they are now. This is fact. Not what you hear from CNBC and all the rest of them. That's all BS. Their job is to get you excited. The jibber jabbers are there to get you excited, to get you happy, to buy stocks. Because that's how they stay on the air. It's crazy, isn't it? Now, again, when you take a look at the amount of debt, and take a look right here at this chart right here, right now. Look at this. This is amazing. In 2008, in 2004, look at what was happening. 2008. 2008. Look what was happening with the mortgages. They were going up, the delinquencies. Look what was going on with the automobiles in 2008. Delinquencies were going up, and look what was going on with credit cards. Delinquencies were going up, and then they collapsed. Look what's happening today. Autos, credit cards, mortgages, doing the exact same thing as what happened back in 2008. 2008. Again, these aren't my charts I'm making up. This is real information. And here's something that's very interesting too, right here. This is amazing to me. They always tell you, and they always lie, and they want you to believe their story. Soft landing, soft landing, soft landing. How many times have we heard soft landing? Where's Kramer? Kramer's got a great soft landing. That's all he talks about. You can play it.
This is the about face that the bulls were waiting for. It's the comeuppance for the myriad bears who never embraced the possibility that Powell could engineer a soft landing, a terrific soft landing. And this one's so soft it barely counts as a landing at all.
What a dope. Look at this. Here's 2001. Look how they pounded on, hey, we're going to have a soft landing. 2007, hey, we're going to have a soft landing. Now look at it. Unbelievable. This is a contrarian indicator saying just the opposite. So again, for more information and also to learn how to sell short, go to philsgang.com.
On the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office 877-600-4264. That's 877-600-4264.
It's up to me.